Welcome back to John Author's Note. 2 years ago, George Osborne, Chancellor of the Exchequer, praised the virtues of Made in Britain and foresaw a march of the makers which would lift the economy. Today, widening trade and current account deficits show that the Chancellor's vision has failed to materialise. What can be done to reverse the sorry state of the UK economy? Can industrial policy help? Discussing this with me today is John Van Reenen, Professor of Economics at the London School of Economics. Good morning, John.
Good morning.
Right, so let's have a look at the first chart which you brought with you today, and it shows the worsening current account balance in the UK. Now we've seen this stops at the end of 2012, but we've seen some trade figures for February of this year, and it's not looking any better. So it's quite bad news for the Chancellor, isn't it?
It is very bad news, actually, because we hoped our export performance would improve dramatically over the last 4 years, not least because we've had a very large depreciation of sterling, and that should make our exports much more competitive, make imports more expensive. But in fact, as we see from the chart, the export position has deteriorated over that time, which is a very worrying thing for the health of the British economy.
Of course, and true, there's been a slowdown in the Eurozone demand, but actually when you look at the performance towards emerging markets, that's really disappointing as well.
It is, and as you say, I mean, part of this reflects that demand conditions have been bad in the Eurozone and other parts of the world. But if you look at the kind of the BRIC type of countries, they've still been growing very quickly. But Britain hasn't been able to really penetrate those markets to the extent that we need to.
Right. So one of the things which economists like you have been talking about is industrial policy as a way to revive the fortunes, not just of British manufacturing, but also the service sector. We can now look at the second chart which you brought with you. And it shows expenditure in business support as a percentage of GDP in several European countries. And we can see that the UK is really not into this type of policies. Is down there with Italy. Business support is only a quarter, for example, of what's spent in Sweden.
Indeed. So, I mean, if you look at the amount of resources, the amount of money which go to support businesses in the form of investment subsidies, other ways of trying to support export-orientated businesses, the UK has an attitude of spending very little. I mean, that's been going on since the early 1980s. We've really thought that businesses should fend for themselves, and you can see from the chart we are very ungenerous in our degree of support compared to, say, countries like Germany and Sweden, perhaps, which have much more successful export sectors.
Right. And this is in spite of the fact that industrial policy can have some beneficial effects for the economy. And we can now move to the third chart, which is a graph from one of your recent academic papers. And it shows the effects of industrial policy on manufacturing jobs. Can you guide us through this chart?
Absolutely. So I would just say that, of course, the reason that British governments, Conservative and Labour, have been sceptical about industrial policy is part of the reason is they believe it doesn't work, that you spend the money and it makes no difference. What we tried to look at, is that true or not? I mean, actually, if you look at the data. And of course, it's very difficult because typically the money which goes on to support firms goes to support firms who are in trouble. So in order to kind of figure out what the effect is, you have to think of a kind of experiment. So the experiment we looked at was what happened when the European Union state aid rules changed. Some areas which used to be ineligible for subsidies became eligible for subsidies, and the other way around as well. So what does this chart show? So the blue line here shows that looks at the areas which are always eligible for subsidies, which are eligible for subsidies on the blue line. And you can see that the change of unemployment is falling, and that's because it's manufacturing. Right. Manufacturing is always shrinking. But if we compare those to the red line, the areas which are no longer eligible for subsidies, which lost their ability to get subsidies, if you like, you can see their performance was much, much worse. So they had a much bigger fall of employment than the areas which were eligible for subsidies. And these areas which lost eligibility did so for reasons which were nothing to do with themselves, which were to do with just the way the rules changed. And it suggests that there was a big positive effect on jobs from the policy.
So thank you very much for being with us today, John. So the UK government really needs to set out a vision for where it wants industry to go. But ensuring that it gets there, well, that's the harder bit.